Good morning, everyone. This is Dana from NexGen, and I hope everyone has had a fantastic weekend. Now, some of you may be enjoying a 3-day weekend, so today I would like to talk to you while we're talking about the money moves that we're making this year is to address the 5 basic principles of financial literacy. And if you don't know what that is earning, saving and investing, spending, borrowing, and protecting. So those are the 5 basic principles, and I'm going to kind of give you a summary of each one of those. The first principle I would like to discuss with you is earning. And when I'm talking about earning, I'm basically talking about trading time for money. Now, this could be whether you are employed or whether you are self-employed. So one of the things that you can do to increase your earnings is to diversify your skill. And what I mean is, and I'll just give you a couple of examples. One could be if you know how to do sign language, or if you know another language, you bring different skill sets to the table. So the more you diversify, the more versatile you can be, and it will also increase your earning power. And also, it will help when you negotiate your worth or negotiate your salary. So let's say that you want to negotiate a higher salary. And in some cases, you can do that. One of them could be, like I said, if you know another language or if you know sign language. And it doesn't necessarily have to, you don't necessarily have to negotiate salaries. You can also negotiate other things. For example, whether you work on site or whether you work from home. So these are different things that you can negotiate. Also, there's different streams of income, because let's say that the job that you enjoy doing or that you're working doesn't meet your need. Well, there's additional streams of incomes that you can look into. Now, some of the things that we're going to be talking about in the next few weeks are also in our monetary education playlist that I will leave at the end of this video. So this one is earning. So you've got the earning, which in most cases is active. Now I'm going to talk about some passive ways. While you are earning, you also want to save and invest. So how you would do that is you actually should put together a spend plan, or what we call a budget. And that way you know what's coming in and what's going out. And you can probably see if there's any challenging areas that you may have where you're spending money that you don't want to spend money. Also, it will help you put together your emergency fund, because if you're trading time for money, there's going to come a point in time where you may lose your ability to perform. Or let's say that you come across an unexpected expense. So what you want to do is you want to take a look at your income and put together the budget so you know what's coming in, what's going out, and what you need to set aside for your emergency fund. Also, it's a good idea to get information on investments that you may be interested in. So definitely educate yourself on different options, such as stocks or bonds or mutual funds, and even real estate. So these are the types of things that you want to look into to help for your future. So while you're doing that, you're also looking into your future. You also want to protect what you have. Okay, so you have your income and your saving and investing going on. Now, you also want to safeguard your financial well-being. And there's some things that you need to do that. Now, the first thing is for identity theft protection. And there's a few things that you can do to safeguard your personal and financial information. Whenever you're going online, make sure that you're using strong passwords and regularly monitor your credit report and even your bank accounts to make sure that there's things that are not going on that shouldn't be going on. And also be careful of sharing information online and even in person, because there's certain information that just because they ask for it doesn't mean they're supposed to have it. So you want to make sure that you protect yourself. Again, we do have a video that specifically talks about identity theft protection. Another thing is to make sure that you have adequate insurance coverage. That could be your health insurance, life insurance, disability insurance, if you so choose, and automobile insurance. So you want to make sure that you protect yourself and your loved ones against any unforeseen expenses. And with the disability insurance, we have protections for loss of income. And then the last thing is estate planning, which is very important. And that is, no matter what age you are, estate planning is important. So at a minimum, you want to have a will, and you also want to make sure that you have things in place to make sure that your assets are distributed the way you want them to reduce any potential conflicts. So you all, and like I said, you do have a will. That's and I would think as a minimum. Actually, and then on your bank accounts, you may consider having what they call pay upon death. That's independent of the will. But these are some of the things that you want to do when you're looking into estate planning. Again, we do have some videos that talk about that. So while you're protecting your income or protecting your assets, we're going to go into spending. I don't know about you, but I had some challenges in this area, because when I'm looking at what I'm spending, I have to make sure that I separate my wants from my needs. Now, that's not to say that I couldn't get the things that I wanted, but I had to make sure that if there was a challenge, that I had to make sure that the needs were taken care of. And also looking at quality over quantity. And what in my mind, what that means is I wanted to get something that I was going to use for a longer period of time, as opposed to getting multiples of it. A quick example I can give you is over the vehicles that I purchased. Now, the vehicles that I purchased was what my money could afford at the time, and I was trading in the vehicles every 2 to 3 years. But when I found the vehicle that I really did want, even though it cost me a little bit more, I actually kept it the longest. So in the big scheme of things, I actually spent less money because I wasn't financing vehicles 2 to 3 years at a time. I actually hold my vehicles at least 10 years. So that's an example. And of course, I'm tracking my spending. Now, tracking my spending, that's something that I needed to do, because that's when I found out that I was actually paying more for an item by way of interest than the actual item was worth. And the item was actually a depreciating asset. An example would be clothes, consumables, those types of things. So when I'm looking at what I'm spending, I actually have to track it to make sure that I am meeting my financial goals. So while we're doing that, the reason why I'm tracking my spending is because I have to be mindful of what I am borrowing. Now, this is actually my favorite part when we are borrowing. Now, I wanted to, and I'm going to probably do this in a future video, talk about how interest rates are calculated and what would work in your benefit and what would not work to your benefit when there are interest rates that come into play. Another thing is managing the credit cards. Now, if you are the type of person that pays off your credit card every month where you're not accruing any interest, or you have a credit card that is 0% and you have an exit strategy for paying it off after the promotional period, those are some ways that we can manage our credit cards wisely. Another thing is strategic debt, and that kind of goes in line with the credit card, because whether you have debt like a student loan, a mortgage, or a car loan, you have to look at the what I call the exit strategy and have a clear plan for repayment. And that will come back to making sure that you have adequate savings just in case the unthinkable may happen. And of course, having adequate insurance. So they all kind of fall in play when we're talking about the different principles of financial literacy. Now, when we're putting together our financial goals, and in keeping with the basic principles of financial literacy of earning, saving and investing, spending, borrowing, and protecting, we have to make sure that we have what they call SMART goals. So over the next few weeks, we're going to be talking about the ways that we can put together SMART goals. And we're also going to be talking about why being financially illiterate is expensive. Thank you again for stopping by, and I hope you have a wonderful rest of your weeks. And don't forget to like, comment, share, and subscribe, and I will talk to you next week.